So as you guys know, Meta has been an investment of mine for a good while now. I was fortunate enough to do most of my buying when it was crashing really hard, and so many people really felt that the company may eventually go under because of how much cash they were burning on the metaverse at a time when growth was also feeling a bit limited, especially from Facebook. But my counter argument was always that Meta is already so unbelievably large that they had to look elsewhere for investing in future growth opportunities, particularly in the metaverse, but really just artificial intelligence in general, which I also felt that they could easily afford because of all of the insane amounts of cash that they generate through their social media platforms like Facebook and Instagram that can help subsidize the other parts of their business that they're investing in for future growth. Well, time will tell how much all of this really ends up paying off for them in the future, but so far the strategy does seem to be working. In fact, it's working so well that they even announced a new dividend. I know, it's crazy, right? I mean, isn't this the same company that the market was selling out of and even shorting for a long time because of how much cash they were wasting? And yet now they want to pay a dividend on top of that? It's pretty crazy. Well, you know that we got to take a closer look at this one, guys. So I'm going to break down this dividend for you to see how affordable it is for them to even pay one, whether it's even a good idea in the first place to be paying a dividend, how attractive the stock is after this new announcement and at its current valuation, because the stock has really skyrocketed by a huge amount. And I'll even share my thoughts on other mega tech giants possibly paying one in the future too, because now everyone is speculating on who might be next. Like right now we have Microsoft, Apple, and now Meta paying dividends. So may Google, Amazon, or even Tesla follow suit in the future? A lot of people are talking about that. If you Google it, there's a lot of articles popping up about it. So I'll share my thoughts on that too. But let's not waste any more time, guys, because we got some fun stuff to look into here. So let's just dive into all of this and take a closer look. All right, well, let's obviously start with that dividend to see how good it even is in the first place. And yeah, spoiler alert, it's going to be a very tiny one because they're just starting out, but we'll talk more about the growth potential for it in just a second. But to start here, it's going to be a 50-cent dividend per quarter and per share, which if we take a look at the current stock price, that is trading for around $460 per share. Might be a little different by the time you guys see this because I'm going to upload the video on the weekend, but as of this recording, it's around $460. Well, if we take the 50 cents and multiply that by the 4 quarters in a year, we get $2 worth of dividend payments every year for each share that you would own, which translates to a dividend yield of just under 0.5%. So yeah, it's obviously very small, but again, there's a ton of growth potential here that we'll look at soon. As far as what Meta's management had to say about it though, Chief Financial Officer Susan Lee told analysts that introducing a dividend just gives them a more balanced capital return program and some added flexibility in how they return capital in the future, and really complements their existing share repurchase program, adding that returning capital in all forms to shareholders is a high priority for them. And yeah, of course, we can see exactly that, as they not only announced a new dividend, but they also extended their stock repurchase program to a whopping $50 billion, which at its current market cap, this would be equivalent to around 5% of all outstanding shares. Is pretty large. Now, in terms of how affordable the dividend is and whether it's a good idea to even pay one right now, considering the billions of dollars that they've been losing every single year on the metaverse, which has only grown larger and larger over time, reaching more than $16 billion of losses just last year alone. Well, I would actually say that it's extremely affordable, and here's why. First of all, Meta is a cash-generating machine, with free cash flow alone reaching $44 billion last year. Not only is that money calculated after their investments into the metaverse and all of their expenses and the capex, meaning that this is just really pure cash here that can be used for practically anything they want. I mean, they could invest even more back into the business, or they could pay down debt, or they could store it as even more cash on their balance sheet, or of course they can use it to reward shareholders. But it's also much larger than what the dividend even costs them, which is estimated estimated to be at just around $5 billion a year. So if you do the math, that would equate to a dividend payout ratio of only 11% of their free cash flow. Guys, that's tiny. I mean, they can easily afford that, and they can also easily grow that dividend for many years into the future. In fact, I think we'll actually see a huge growth trajectory from here of many really consecutive years of increasing that dividend further over time, which will be great for any dividend growth oriented investors as well. But on top of that, the balance sheet is also one of the best in the world. So I'm not even worried about any debt obligations either. In fact, their cash reserves alone sit north of $65 billion, which easily covers their long-term debt of just $10 billion. And their current ratio is also strong at about 2.7, while their total ratio sits north of 3 as well. Guys, that's very strong here, and overall, their position is frankly fantastic to be rewarding shareholders, which is really my biggest takeaway from all of this, is that clearly management is very committed to rewarding shareholders going forward. Now, obviously, there is some controversy here because they also laid off a ton of their workforce recently. In fact, they fired more than a fifth of their workers just in the past year alone. So to now be giving so much money to shareholders while also laying off so many of their workers is, kind of messed up. But I guess the counter argument to that would be that they obviously overhired during the pandemic when everyone was stuck online because of the lockdowns. You saw an increase in online traffic, so they needed to hire more workers. But now coming off the pandemic, they're no longer needed. And I would also argue that the economy has been shaky as well. There's a lot of different ways we could look at this, but the point being that moving forward, a company is kind of left with two choices here. Either you stay overstaffed paying workers that you don't really feel like you need them anymore, or you lay them off. And I know it sucks. I mean, I hate to see anybody losing their jobs. I think it's one of the most heartbreaking things in the world. It's also just kind of the reality of the situation that we're in. I'm not sure how much we can do about that as individuals. It's very unfortunate. Like I said, it's very sad, but I'm just reporting to you the facts here, as I can see them. Anyway, going back to the actual stock, because that's, that is what this channel is about. We look at stocks here. So when analyzing the stock, how attractive does it look here as a possible investment moving forward? Not just because of the dividend here, but also how does it look in terms of the valuation, because the stock itself has actually risen by a huge amount. So how bad is that valuation now after such a big rise? I mean, if you look at the stock here, just in the past year alone, Meta stock has skyrocketed by over 150%, leaving it now at an all-time high. Now, this is in stark contrast to that huge crash that we had seen before, where, again, I was lucky enough to do most of my buying in, and thankfully I was able to ignore a few of the bears that were kind of, making fun of me at that time. But ultimately, the stock did eventually recover by an unbelievable amount. And yet, even here, guys, I actually still think that it looks pretty darn attractive. I mean, believe it or not, Meta stock is still trading not only cheaper than its own 5-year average on a PEG ratio basis by over 20%, but they're also 25% cheaper than the sector as well. How crazy is that? And granted, their regular PEs are a bit higher, but even at a forward PE of 23, I actually think that's still pretty good because it's not only cheaper than their own 5-year average, but it's also about the same as the S&P 500's PE ratio as well, despite this being a much better company than the average one listed on there, at least in my opinion. But I can also back that opinion with some facts too, because Meta, I would say, just look at some of these numbers here. Meta still has close to half of the world's entire population using their apps, which is hugely attractive to advertisers, especially with all of their investments and upgrades to artificial intelligence, which they directly attributed to their growth in the quarter, even helping them grow their ad business at a faster rate than Google. They also saw a bigger uptick in international companies spending to advertise on their platforms as well, particularly from China, which is now accounting for 10% of their sales. It's pretty crazy. And the CFO pointed to increased spending from e-commerce, entertainment, and gaming companies as well. In all, their investments into AI are helping them by so much that Meta will now be accounting for over 20% of all US digital ad spending this year, with a mind-blowing 75% of social media too. That's more than 3/4 of the entire social media advertising market here in America. It's pretty interesting. And in fact, they are so large that even when you look at Instagram alone, of course, they've launched Reels to compete with TikTok, but more recently, they also launched Threads to compete with Twitter. And check this out. According to eMarketer, if just 1 out of 4 Instagram users, every 4 Instagram users were to sign up for Threads, it would already be the size of all of Twitter combined. That's how large Instagram is. They just need 1 out of every 4 Instagram users to sign up for it. It's pretty crazy. And that's why I think the metaverse is just so important to them, because the metaverse really will have so much digital real estate to advertise on. And right now it's really like an empty world that is just kind of waiting to be filled in. So whoever becomes the leader of that is likely going to benefit, I would say, the most from what might be the next giant wave of growth in the digital advertising market. So that's why I really have like zero issues with how much they're investing in that, because I do think that it's pretty necessary for the future. But even here right now, after doing sales of over $131 billion last year, they are still somehow expected to grow by nearly 20% this year, with another double-digit rise expected next year as well. I mean, it's just absolutely incredible what type of a beast this company has become, and still all the potential that they have in the future. And again, I think this is almost entirely to do with that giant user base that they've been able to build up, and also how much they're better monetizing that user base every year, thanks to those giant investments into artificial intelligence that, again, are paying off right now. And I think they're going to pay off even more in the future. But just to kind of summarize here for Meta, personally, I actually think that the stock is still attractive right here, and I think the dividend does fit nicely with it too. It's not really necessary. I mean, I could take or leave that dividend, but you know, as an investor, I think it's fine. I'll take it. I mean, if they're going to pay it, I'll take it, but it's not something that is a huge deciding factor for me investing in the stock. I actually think the stock just on its own is very attractive anyway, moving forward too. But anyway, so that's Meta. What about these other tech giants like Google, Amazon, or even Tesla? Because there's been a lot of articles popping up recently, a lot of people talking about this, if they might be next for paying dividends too. Well, for sure, Tesla is out of the question. I mean, I know that, you know, Tesla is included in what, the Magnificent Seven, so that's probably why they're being brought up, but it's not a very realistic one. I mean, their free cash flow is much less stable, and even putting that aside, there's just too much going on right now in the automobile market and also the macro economy at large for a luxury EV maker like this to be wasting their money on dividends, especially for a more like tech-oriented automaker like Tesla that depends so much on growth. It's a highly valued stock. It really needs growth, and they're trying to do all kinds of crazy things like autonomous driving and even robotics. It's stuff that just costs a lot of money, a lot of research and development. I think that money is much better spent on those growth initiatives than wasting it on, you know, some dumb little dividend. But that's just my opinion. Anyway, that was Tesla, but what about Amazon? Well, I actually think Amazon is in a better position. I mean, they're of course larger and more established, but I also wouldn't expect a dividend from them either, at least not for many years. And there's really one primary reason for that. That's because Amazon has never really cared about profits, at least historically speaking. And I know that there are some Amazon bears out there that love to call Amazon stock too expensive, or they ridicule how small their profitability is, acting like the stock is a bad one to be, you know, thinking about investing in. But in my opinion, those people are either very biased, maybe because they're shorting it or whatever, or they're just flat out ignorant, because they seem to always completely ignore the fact that Amazon doesn't care about profits or valuation. It just doesn't matter to them. And it really doesn't matter as much either when you're talking about Amazon stock, at least not to the degree that it matters for other stocks out there, because this is really one of the most ambitious companies out there that is always just seeking for more growth. They're always kind of trying to dominate the world, and they will throw all their money at any obstacle that gets in their way. They're always trying to enter new markets and just dominate them and take out competitors. And they do this while other companies are focused on profitability and valuation and rewarding shareholders and all that kind of stuff. But meanwhile, Amazon is just growing, just taking over more and more places. And, you know, some people just kind of are oblivious to that. But so in my opinion, if we're talking about Amazon possibly paying a dividend, I don't think it's going to happen anytime soon, because it just doesn't really fit Amazon's mentality, at least not yet. That does leave us though with Google, and that one I actually think is the best candidate here for an upcoming dividend payer. I mean, last year, for example, they almost reached $80 billion of free cash flow. So they certainly have the funds for it if they ever do decide to start paying a little tiny dividend and then maybe grow it out over time, which we've also seen other tech giants like Microsoft and Apple do as well. So it would kind of fit to do something like that. But even there, I still think that we're a long ways away from this one paying a dividend too. Now, I know that we're just kind of speculating here, but I just think that Google has so many different areas and opportunities to invest in that, as a shareholder myself, so I'm probably biased, but I would just like to see them just continue to just pour all that money just right back into the business. Because when you look at like the Magnificent Seven, for example, it really does feel like Google is doing similar things to all these giant companies like Microsoft and Apple, even Tesla. I mean, Google has like Waymo, they're even doing autonomous driving. So Google is doing something similar to all these companies. They have so many areas to invest in. I would just like to see them just pour all that money right back in rather than wasting it on a dividend that I just don't really care that much about. It's going to be a very small one. Maybe in the future it would make more sense, but right now I still just think that there's a lot of stuff that Google can be doing with that money instead. But that's just my opinion. We'll have to wait and see. If we are just kind of making a guess on who will be the first one though out of these ones to pay a dividend, my money would be on Google because I just think that's the best candidate of all. But anyway, that's my opinion on all of this stuff. I hope you enjoyed the video. Let me know what you think about everything we discussed. Do you agree or disagree with anything I said? Are you invested or in any of these companies? What do you think about these different things going on? I'd love to hear your thoughts down in the comment section. But thanks again for stopping by, my friends. I hope that you're all doing well, and I appreciate all of your support. I will catch you in the next one. Take care, everybody. Bye-bye.